will talk about the corporate income tax planning and taxable income adjustment about FT and Mayday LLC. First, I will introduce about myself. My name is Famusanai. Now we come to part one. The corporate income tax planning in practice, a methodological case study of FT Corporation. First, about overview why I choose FT. As this company or hosts high-privacy public data for its full compliance with fast and secular. The third is suitable for studying legal tax planning is not tax evasion. About the key characteristics of MIT is a live dynamics technology collaborate about the multi-segment operation includes software in IT services, telecommunication and education. Moreover, its diverse cost structure and revenue recognition method. But the economic advantages is audited financial statement, reliable and verifiable data, is easily report production and verification of results. About the profitability as a prerequisite is consistent positive accounting profit before society is enable meaningful analysis of deductible and non-deductible expenses, tax assessment and tax planning effectiveness. But the analysis focus area is depreciation under secular turnover, R&D expenditure and taxability is determining differences between accounting income and taxable income. While the nature of tax planning is domestic regulation and basis tax planning, no aggressive stock avoidance or profit shifting is moreover is fully aligned with Vietnamese tax law coursework. Was administration for non-deductible expense. Firstly, is a profit and taxable income is not a business expense or tax deductible. Is a non-deductible expense must be added back when financing CIT. Is adjustment are legally required or discretionary. Secondly, is legal basis or law on corporate income tax. About the criteria for deductible expense. Firstly, is an expense is deductible only if all three conditions are met. Firstly, is actual incurred and related to business activity. Is firstly is expense will reflect overall economic transaction and must have a reasonable link to support income. Thus, authority assess economic substance, not explanation. Secondly, is common harvest item include luxury entertainment, executive overseas, high value gifts, and expense benefiting relative. Second is lawful invoice and supporting documents. First, invoices must be legally issued, accurate and consistent, not fraudulent. And secondly, is a supporting document record contract, acceptance report, and payment records. Third is non-cash payment requirement. Firstly, it is for more than 20 million BND must be paid on cash. Secondly, is cash payment to expenditure law, and the purpose is cash flow transparency and anti-tax evasion and money laundering. Next is assessment depreciation expense. Because in statistic we can see the scenario tax rule and adjustment. And from three of these, we can add back 320 million Vietnam dong. About the assessment, R&D expenditure is set in the index. We can see scenario, tax rule, and assessment, and from 3 years we can add back 600 million Vietnam. Next is the corporate income tax finalization. We can see this table of determination of taxable income. Next is the corporate income tax payable. We can see payable, CIT payable is about 1,244 billion Vietnam dong. And next is a summary of form. We can, yeah. Next is part two, tax planning for startup company Mayday LLC. Firstly, application jurisdictional region variable. Vietnamese uses tax incentive allocation to attract investment. Secondly, is high tax zone offer 0% CIT for 5 years and 10% CIT for next 10 years. Thirdly, Mayday LLC chose high tax zone for to legally differ in reduced CIT. The outcome is lower for long-term tax burden and stronger early-stage capital. About the application of genetic and variable, because firstly, tax incentive depend on the nature and the company size. So Mayday LLC operates in software development and R&D in technological innovation. Thirdly, is the activity aligned with government priority sector. Next is the tax planning process for the R&D project. The first step is identify applicable incentive. The first step involves mapping or applicable tax incentive related to high tech zone, software development, and R&D activity. They include reviewing relevant law, degrees, and circular to ensure completeness. Sec- Step 2 is verify legal eligibility. Identification alone is efficient. Each incentive is evaluated against Mayday LLC actual operation to confirm eligibility. This step acts as a filter, separating realistic benefits from theoretical ones. Next, step 3, quantify tax saving. Tax incentives are translated into measurable financial outcome by estimating tax saving over time. Mayday LLC can incorporate tax consideration into investment appraisal and budgeting decision. Here, tax planning moves from the legal department into strategic planning room. Next is step 4, asset compliance risk. No tax strategy is complete without risk evaluation. Mayday LLC assesses compliance risk, interpretation risk, and documentation requirement. Step analyze uncomfortable trust tax incentive reduce tax payment, not scrutiny. Step 5 is implement monitor. Finally, the strategy is implemented and continuously monitor changes in tax law, business activity, or regulatory interpretation are tracked to ensure ongoing compliance. Tax planning in this scene become a living process rather than a one-time decision. Finally, step 6, tax planning as institution intelligence. The scale of Mayday LLC demonstrates that effective tax planning for startups in Vietnam does not require aggressive change or legal gymnastics. Instead, it requires Institutional intelligence, ability to receive signal, allow business decision will be more incisive and implement strategic systematically. Next is part 3, task saving and after-task capital analysis. Firstly, ability and task saving from pre-preferential theory. Basic assumption include taxable income duration is about 5 billion a year in 50 years. About its rate is 10%. Comparison to standard CIT 20% tax is 1 billion a year and preferential CIT about 10% tax is 0.5 billion a year. And so we can see conclusion if preference TOCIT significantly increase project value. Next is tax planning and tax evasion. About tax planning include legal and transparent, based on explicit incentive, fully documented and auditable, and low long-term risk. And secondly is about tax evasion, consists of illegal and concealed, based on fraud and misreporting, short-term gain, high long-term risk. Key takeaway: incentive are earned, evasion is hidden. Thank you for your listening.